Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on April the 15th, 2021 with the Forex market analysis for you. And real quick, we want to show you our disclaimer just to remind you that this webinar is for illustrative and educational purposes only. Also, if you have not done so already, please like and subscribe to our YouTube and Twitch channels. And also, when you get a chance, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, let's get right into our live action screen here. We had the Forex-Trading-Unlocked.com website pulled up, and we've already pulled up our workstation page as well. We're going to go blow past the numbers here. As you can see, the dollar index has continued to free fall yesterday and is looking still very bearish. Remember, though, overall it is in a medium term uptrend. Right now it is just in a corrective slide lower. The question is, how long can it maintain? Well, there's some interesting things shaping up that may start to cause a dollar turn over the next 24 hours as we wind down the trading week. So let's check out what's going on with the Euro US dollar, which is the biggest component of the dollar index. It spiked a higher move high today by making a little bit higher high than yesterday, and it took out this high from back in March, this lower move high. So we have a lower move low and a barely lower or higher swing high on the chart here. The question is it going to maintain itself, or is it going to run out of gas? That's a very good question. Is it a beginning of a neutral to bullish outlook for the Euro US dollar? Well, there's some things that are probably going to change that. Interestingly enough, the US Treasury bond market yesterday had spiked higher move highs and settled lower. Now, we can't show you futures in real time because of the fact of regulatory rules, but as you can see, this 158.03 level, this is where the Treasury bonds are currently trading at. So we have higher bond prices, meaning lower interest rates. That's negative for the dollar. So as you can see, that trend has been maintained through some of your major currencies. As long as the 30-year starts to lower rates on a market, lower the market rates because of higher bond prices, that's going to add a little fuel to the fire for these dollar bears. There's other forces that are at work too that are kind of a tug of war between these markets, but right now the trend is your friend. The short-term bulls have momentum, but we're going to look at some things that may start to show the indication that this is running out of gas. So let's look at the factors that can make the currencies swing a little differently. So we have the wrong symbol. There we go. XAU USD. We have gold making a higher move high breakout today. This is actually kind of big. This is going to have an influence on the Japanese yen, which we will get to in a little bit. It also has an impact on the dollar, with gold rising right now at this level like it is. It is very likely that you're going to see a little bit more action in some of the other currencies because as the dollar starts to lose its momentum and strength rather, and downside momentum is building, we're getting other supporting markets that are helping to edge the dollar weakness. This rallying gold market is one of them, so we'll see if this can have a follow-through trend to the upside over the next few sessions, or if this is just a spike high before it starts to just meander its way in a neutral trade at best. Now let's go to the British pound US dollar. This market still has been making lower move lows and lower move highs, but it has been trying to grind higher. Now this is the scary thing when it comes to dollar strength and weakness right now. Oil prices spiked higher yesterday, and that's something that's strong for the pound. We're not getting a big rally, so what we need to see over the next session or two would be a pop that gets us above this swing high at $1.39.19. If we can get a rally above there, that would be a very good indication that the market is turning, dollar weakness is prevailing, and that we're going to start to see another surge in buying of currencies such as the pound and a few other ones across the globe. So we're waiting for a breakout, and once again, futures we have to show and delay. But if you see how this market broke out to the upside, making a higher move high yesterday. Current trading is right around the settlement at 63.37. It's only slightly higher on the day. Should we get another rally that starts to spike up towards this high at 68.13 in front of the weekend, it is very likely that we will have bullish follow through next week. This will impact the British pound US dollar. This is the fuel for the fire that we need. A continued rally in the crude oil prices would stage a good chance for another rally in the British pound US dollar, challenging not only 139.19 but breaching this level and starting to head back towards the 140 and 141 basis levels for this currency. So we got to see how things are shaping up as this week ends, but I think we are definitely starting to see this little area become an issue. The Swiss, US dollar Swiss, tried to make a bottom yesterday, key off of that low. If you're an aggressive bear, do not be long below the low from yesterday. This momentum is hard to fight right now. Don't try and catch a falling knife. It is very likely that as interest rates continue to go down in the 30-year, and if oil continues to spike, that we will see, at least in the short run, another challenge, or a test of support here at 91.84, bringing it down to maybe this 91.5 area before we get a bounce. Right now, this market is neutral at best. It had been an aggressive bull market for the whole first quarter of this year. Obviously, April, starting the second quarter off with a big sell-off. We could have a shoulder here, a head here, and have another rally that will fail, and then have it set up for a big dollar break. So before you're too overzealous on being a dollar bear out there, folks, make sure that you realize the conditions, and it's very likely that we'll have a swing in the opposite direction before we have any true trend verified as far as dollar bears. And remember, there are things like gold and oil and interest rates that are influencing things that may actually come back and give the dollar strength. So with oil going higher right now, and with gold going higher right now, it's a little bit of a mixed bag of goods right now. So because of the interest rate trade in gold right now, the US dollar yen is looking to test support even more. If we fail from 108.40, that has us looking for a test of 107.5 easily, with 106.80 being probably the extension of any real big slide. Now, as oil does start to rally, should gold all of a sudden turn back towards its lows, and especially if the 30-year interest rate starts to turn around as well, then I would be very, very cautious being a bear, because it's very likely that the bulls will come screaming back, and not only will we come back and take back all that we've lost in the month of April, it's really likely that we'll challenge 110.98 here and make a move for the 111, 112, 114, even 118 area for the US dollar Japanese yen. If crude spikes out, like if I said, like when I showed you that chart from yesterday, if we start to really spike up to new highs and we breach that last swing high, we're heading to $75 a barrel oil, and I have $100 a barrel prediction anyhow for the longer term trend for oil. Should that really be the case, that we remotely get from 70 up to 75, let alone 100, the US dollar yen will be trading up at 120, 125 in the longer term basis because of the price of oil. This would also be indicative of, can be supported if the gold market starts to fall back on support and make new lows. Should that coincide with higher oil prices, then it's very likely that the US dollar yen, no matter what the other currency crosses are doing, that this bull market will resume its trend. So use caution at these levels, trying to be an aggressive bear right now, because this market could snap back on a dime. So that's at least for this currency cross. So these other markets are something you have to really pay attention to. Now, as we see the current rally in gold and oil, you can see what it's doing to the Australian dollar. Off to the races it is. However, we are still coming off a lower move low after a lower swing high. Only a breach of 78.5 puts us on the neutral to bullish campaign once again for the Australian dollar, US dollar. This would be likely if the interest rates if the 30-year Treasury bond continues to rally, if oil continues to rally, and if gold continues to rally. That would make conditions ripe to add fuel to this buying momentum. And if we take out the 75 half, all bets are off. We're going to be looking to gun for this previous swing high in no time. Remember, the overall trend for the Australian dollar, US dollar, has been a bull. We had this head and shoulders pattern that emerged. We tested support a little bit, and now we're getting this rally. We need this to fail and come back for a test of 75.30 to give us any reason to see any extended sell-off. And like I said, with oil rallying, gold rallying, and interest rates going down, meaning bond prices going up, it is very hard for this market to sell off right now. So we'll see what happens. The precursor to this Australian dollar, US dollar rally was the explosive move to the upside in the New Zealand dollar currency yesterday. This one is mimicking the Australian dollar in a big way. We're looking at this outlook also in the same way. Should we get a challenge of 72, 73, all bets are off and the big bull is back. And then we will be looking for a challenge of this last swing high with 75 to 77 actually being our longer term upside target. Only a failure from 70 even, basically 70 even 02 right here would we be bearish, looking for a test of support and a continuing of the short-term bearish correction that we are in right now. So the question is, are we going to maintain the bearish correction and make another run at support? If so, then this current rally is most likely going to fail soon. But right now, like I said, with these other commodities and other markets, interest right now growing in the trends, it's unlikely for this to do so. US dollar Canada, here's another indication of why these other markets are big. You can see this thing chopping around. Well, interest rates definitely have an impact on this one, and especially as bond prices rally, it's really unlikely for US dollar Canada to get stronger. With oil prices spiking, once again, it's very likely that US dollar Canada is going to make a run for the lows, and a test of 123.65 is on the agenda. This would also happen if gold prices continue to rally as well. So gold rallying, oil rallying, and bonds rallying is negative for the US dollar Canada currently. Is that always the case? No, but currently those trends are, there's a divergence or a support depending on which market you're looking at for these various currency crosses. It has been very impactful over the past few months. Those that choose to ignore it, that is a choice. But those that don't are definitely aware of the fact that they have been impacting the trends, and they are one of the best indicators of how the trend is being maintained, let alone where the overall direction is going for these currency crosses. So let's go back to our Euro US dollar here. We have the Euro US dollar. Since we've been talking, really basically not doing anything. The U.S. markets have been open for a little over an hour now. We'll see how things shape up. Like I said, there's a lot of dollar bears out there that are being very aggressive, once again, with gold being up, interest rates going down, and oil climbing. This doesn't bode well for the U.S. dollar in the short run. But once again, if gold turns around and if the bonds turn, I mean, you got to remember, the Treasury bonds have been in the bear market versus for the past few months. The fact that they're bouncing right now is they're coming off of a major swing low. Gold is not exactly a bull right now. It's rebounding after having been beaten up for the past few months. As far as oil, it's been on a pause after a major surge just over the past couple of months. You got to remember that the price of oil per barrel has basically tripled in the last quarter. So I don't know if you've noticed the prices at the gas pump, but just in the past 6 weeks, I'm now paying $1.50 to $1, almost $2 more now a gallon, depending on which car it is that I'm driving and the gas I'm using. So and that's not changing, especially with the new rules in the United States caused by executive order. Remember, there are no new permits ever going to happen in the United States on or offshore again unless that order is lifted, meaning that our production levels, unless you have a permit already, there will be no new drilling, and that means unless you have a well right now that is active, you are now out of business, or do not have the ability to get into the oil business in the United States anymore. So as that crippling thing does impact the market slowly in the U.S., overall the impact of oil and oil prices now, the expectancy for the price of oil and the floor for oil is rising as well, especially since the XL pipeline is also taking off, has been kiboshed, and the mandate to now ship all oil in the U.S. over the rails. Once again, it just helps Berkshire half the way, but that also brings in the cost of carryover and the cost of oil. So it'll be hard pressed to see oil, at least in the short run, until any orders are overturned and things change, that oil will no longer ever spike below probably 35, 40 bucks a barrel, because now the cost just in drilling and refining and moving of oil is just under $40 and increasing. So that means that where we're at right now, oil is actually kind of cheap right now. So, and like I said, $100 is the price target. This will impact these markets, especially countries like the Euro or the Eurozone and the Swiss, the yen. These are all countries that do not have oil. British pound, on the other hand, it does help them. Canada, it helps them. Australia, New Zealand, those are all countries and currencies that will benefit from higher oil prices. The only thing that would slow down their trends would be any type of serious interest rate rise in our country, which is not going to happen through the Fed, but through the bond market, it may, through collapsing bond prices should the downtrend resume, and also with the fact that if gold also starts to collapse once again. So very interesting stuff out there. We don't have any questions, so we are going to just go touch one more thing. Just to remind you, if you haven't done so, please subscribe to our YouTube channel. Make sure you like it, pass it on to your friends. Hit the notification bell so you know when our next webinar comes out. And we'll be looking at these markets once again. We're waiting for a signal, and we'll see what happens. So my name is Teddy Keckstedt from Forex Trading Unlocked, and we look forward to seeing you again soon. You have a good day.